Hello everyone, I am Aditya Khari from 3FVC and this video is about Safe Notes. Now, before I tell you more about Safe Notes, let's first try to understand that who is this video for. A. You are a young founder looking to raise his pre-seed round. B. You are an aspiring investment banker looking to know the ins and outs of how startup capital works. Or C. You're another hobbyist who wants to understand everything that is going on with the startup ecosystem. This video is the first part of a 3 video series which is all about Safe Notes by 3FVC. Now, who I am? Uh, I am Udit Okadi. I am a second year STEM student at IIT Patna. Also, I run 3FVC, which is a micro fund under Malpani Ventures, which funds young entrepreneurs who are looking to raise their first checks. Now, we are the first institutional partner who uh, invest in your startup if you're a young founder. Now, at 3FVC, we invest via Safe Notes, which means that if in case you get selected to be invested at 3FVC, you need to have a clear idea of Safe Notes and how they work and how they function, what are the ins and outs of this instrument. So, without wasting any further time, let's quickly learn about Safe Notes in this video. First, the Safe Note, what exactly it is. So, it is basically an instrument. It's simple agreement for future equity. It is a financial instrument which is used by startups and investors to let these investors invest in your startup without actually having you to dilute your equity at the current moment. Okay, why it is important? Because right now you can have investment in your startup, but you don't need to dilute any equity. You don't need to put anyone in the cap table, and you don't need to put in any valuation right now. So your startup raises money, but without a dilution or without any valuation game. Okay, cool. Uh, why is this a big deal apart from 3VC as well? See, in the last quarter of 2023, 89% of the investments made in pre-seed stage were done using uh, Safe Notes only. And it really tells you the story, like at global level YC and a lot of different top in fact VCs operate using Safe Notes. In India, 100x VC, Peak XV, all this, in fact 3FVC as well. Most pre-seed VCs invest using Safe Notes. uh, so you know that why is it very much important. Okay, coming back to the next point, uh, we have some key characteristics of Safe Note in order for you to understand that what exactly it is. Now, at this moment, if you have any prior knowledge of uh, how the financial instruments work, you might think that Safe Notes are just like, or maybe just a wrapper of a convertible debenture. And sadly, in India, it is like, till a quite extent, it is, yes, but in the US, it is not. Uh, I'll tell you more about the Indian version of Safe Notes in this video. Uh, but for the global version of how Safe Notes work, so the first thing is no debt characteristic, which means safe are non-debt, therefore they do not incur interest charges or have a maturity date. So this is basically cool. It is not a debt, which means you don't incur any interest charges, nor you have a maturity date when you have to return the money to the investors. Second and most important, it is a universal point. Is basically it is uh, set to have automatic conversion triggers. So let's say you raise the next round, or maybe your valuation or revenue reaches one point, or maybe whatsoever happens, then you have basically a automatic conversion trigger which is set in action, and your note is converted into equity for the investors. Third point is basically variant terms. Safe Notes has multiple different versions. maybe attached to the valuations, maybe your numbers, engagement, rounds, whatsoever, whatever you want. And it has a lot of variations in it. And then it has indefinite runway pressure, so you are not required to raise the next round, or you are elapsing the hype of your first round. Interestingly, apart from these four, we have a few more things that I'll actually add later in the later part of the video. Uh, Now, this is where I was telling you that it is comparable with convertible notes and priced equity rounds, and to a certain extent, yeah, it is. Uh, but you need to understand that convertible notes carry an interest rate and a maturity date that allows investor to demand repayment, which means, as I said, the convertible uh, debentures or convertible notes, they are again a debt instrument, but safe notes are basically an equity instrument, which means at the end of the deal, the money invested will return equity to the investor, and you are not liable for any loan repayment. uh, and this is one of the most core point of why safe note is there. Apart from this, you also need to understand that the whole safe note framework is open source. In the global version, the global variant of safe notes, you can find it in official YC docs. I'll attach links for you to see the templates as well. And for the iSafe notes also, I'll just okay, this one for iSafe nodes as well. You have basically 100x VC who have open sourced all the versions of uh, iSafe. I guess there are 6 variants of iSafe which are open source, and it's publicly accessible for everyone. You, me, or anybody who is interested in investing in your startup through safe nodes. So again, this is a cool advantage. Now, coming back to the conversion mechanism, what happens when the investment is made, how this is converted. So safe notes are basically uh, work this way, as the investment amount by the conversion price, which is calculated either via the valuation cap formula or a discounted price relative to the next financing round. Which means, let's suppose you are raising your series A at $10 million valuation, then or maybe raise this at 10 million valuation in, let's say, next 3 years. So you can have a safe note built that clearly states that by the time you'll raise your series A, the investor has the option to convert their preferences, convert their safe notes in equity at, let's say, $1 million valuation. Okay, uh, this is basically an example. You can set your numbers as you want, and as agreed between you and the investor. But yeah, this is how the conversion works. Or maybe it can work on achieving certain, let's say, deadlines, or maybe certain revenue marks, or maybe uh, uh, whatever you said, maybe at certain time, let's say 3 5 years. And then we have the advantages and the limitations of safe notes. Again, advantages are huge, limitations are less, but still it's our duty to understand each of it. uh, the first advantage is basically, again, it eliminates the need of extensive share purchase and shareholder agreement, reducing legal cost and time to close deals. Now, if you're an Indian startup raising a first round, how much money do you have in your bank account? Let's say 1 lakh, 2 lakh, 5 lakh rupees. Again, you are a student and you are raising a first round, which means that you need money, right? So, having to just put somebody on the cap table added so much friction in the whole process of fundraising that it sometimes become very complicated to raise fund at all. And that's why this safe note is basically the first way and the most famous way for you to take investment, the investor to get a guarantee that he will get the get the valuation and shares as per the agreement, as per what you and he has agreed right now. But again, reduces all the paperwork that comes into the play. uh, the second point is, again, is no immediate dilution or debt obligation. You neither have a debt to repay, you not have equity to dilute, somebody to put on a cap table. It's a easy to go method, a founders friendly structure. And third is basically reduced negotiation points. You don't have to come up and read a 10 pager term sheet or maybe a whole sort of negotiation terms right now. Again, we have a little bit disadvantages, but one I want to highlight is basically investors have no guarantee of equity conversion in the event of prolonged funding droughts or company's failure. So this is for all the investment bankers seeing this video. uh, if the company fails, you don't get anything. Okay, neither you have an equity, neither you have any shareholding, you don't even have a debt that you can collect from the company, right? So this is something, if you are investing in a long-term company or something you believe from deep inside your heart, then you have to go with safe notes. If not, you have to take time to evaluate the company more. Now, the sixth point is basically the iSafe, the Indian version of SafeNote. And again, I have highlighted that this was introduced by 100x VC back in 2018 or 19, I guess. Okay, in 2019. It was introduced in 2019 by 100x VC, which is basically a toned version of YC's initial safe notes, uh, but as compulsorily uh, convertible preference shares or CCPS with a nominal non-cumulative dividend of 0.0001%, thereby securing its status as an equity instrument under the Indian corporate law. Now, this is something you have to understand, that we basically, for the Indian market, to have this as a valid document and not treated merely as a contingent contract, uh, we need to have this structured as a CCPS. Otherwise, it is all null and void. And basically, these iSafes are governed by the Section 42 private placement, 53 preference share provision, 62 further issue of share, and Companies Act 2013. uh, Again, then there's a lot of things. Okay, uh, I'll just go in brief. Share capital and debentures, uh, 2014, the company's prospectus and allotment of security rule. So all these things are like where your CCPS are compliant. Okay, and you also have to register it to the Secretary of Companies, and you have to go through this. But again, all this paperwork, all this thing is very sustainable for you if you compare it with direct equity transfers. Okay, and adding somebody to the cap table right now. We have certain regulatory and FDI compliances that we need to do, but I guess this is something to be talked upon in detail in the next video, where we will talk that what are the compliances needed for you having an investment done uh, using safe notes as the instrument. We'll also discuss about the tax and accounting treatments, where like how the investors are taxed, how the founders and everybody involved need to understand the accounting side of the deal. Then we'll talk about some best practices and we'll come to the conclusion. For this video, we have understood everything till the Indian version of ISEF. In the next video, I'll start with an example of, let's say, uh, you are raising $10,000 from a VC in India using iSafe, then how the whole structure goes. And then we'll move to the compliances part of the safe notes, and we'll just wrap this series up. So I guess you like this video, and I'm super excited to start something and share more details to you regarding how the financials of startups work. I am again Odita Kari from 3F VC. You can apply to 3F if you think you are the founder who is frugal, young, and building something innovative in AI or deep space, who is building something innovative in AI or deep tech space for India. Thank you.